very privileged to have Jayati Ghosh with us today. She taught for 25 years at JNU in Delhi and is now teaching in Amherst and is also co-chair of ICRICT, that committee that is thinking very hard about tax reform and how we can in particular reach a fairer system of international taxation. And that, I think, will be a mainstay of today's presentation. And I hope you will all be ready to ask difficult questions in the course of it. Jayati, up to you.
Thank you so much, Thomas. And hi to all of you. I'm sorry I can't see you. And I'm even more sorry that I'm not there in person. It's circumstances beyond my control. I really do wish I could join you. Hi, everyone. So, I got a set of excellent questions posed by Laura in her paper. So I realized that all of you are pretty well informed already about the issue and about the various complexities and, if you like, the sometimes over-optimistic ambition of trying to reform the global tax process. But just to give you a background anyway, I mean, I know definitely Laura has it and probably all of you have it, but let me give you a very quick background of the nature of the problem and why, in fact, we just need such a tax reform so urgently. So essentially what the problem is that, we have a tax system that was created really a century ago. Yeah, this was a global system of organizing taxation that came up in a world that didn't have multinational corporations to speak of, not in the way that we know them today, and didn't really have tax havens to speak of in the way that we know them today. So the world has changed dramatically, the tax system has not. And what does that mean? It means that, for example, multinational corporations, especially the big ones who have subsidiaries in the relevant places, in the right places, are able to get away with very, very low rates of taxation, sometimes close to zero. In fact, quite often close to zero. Amazon, for example, paid no taxes for about 4 years until last year. So that's one problem. And the other problem is that we have high net worth individuals, that's the nice polite term for the really stinkingly wealthy, who are also able to get away with no tax, right? Or low taxes because of the ability to park their money in tax havens, but also to affect and put their residence in tax regimes that are extremely, shall we say, generous to their holdings. And so they also get away with much, much lower taxes. I mean, George Soros famously said that he pays lower taxes than his secretary. But once again, we have the richest people in the world. I don't want to keep naming names, but yes, Mr. Musk and Mr. Bezos actually pay close to zero tax. And apparently both of them also get child support, which is one of those things that comes if you have lots of children. But these are not anomalies. These are not bugs of the system. They are features of the system because the system effectively enables it. And once it enables this, once you have a competition, you are going to get everyone taking advantage of this situation. How does it happen? In the case of multinationals, we have what is called the arm's length approach, the arm's length approach to what a company is, which is to say that when we think of, say, Apple, we're thinking of Apple as one company, right? But in fact, it is for tax purposes divided into the jurisdictions in which it has an office. So Apple France will pay taxes to the French government. Apple India will pay taxes to the Indian government. Apple Ireland will pay taxes to the Irish government, and so on and so forth. This enables them to shift around their profits to low tax jurisdictions. And how do they do that? By inflating costs in the countries where there are higher taxes. And those costs are usually payments made to subsidiaries in the low tax jurisdictions. So you find a lot of Apple's transactions are intra-company. They are within the firms, within the broader corporation, and they are things like repaying interest on a loan, which they needn't have taken, but they have taken from a tax haven subsidiary, or repaying, the rights to use the patent. The intellectual property rights are almost always held in tax havens. some in Ireland, some in Delaware or Nevada. These are tax havens within the US, some in the standard tax havens like the Cayman Islands and the places in the Caribbean that have the bad reputation, if you like, without necessarily being the worst culprits. So these possibilities basically mean that the countries where the economic activity actually occurs, the countries where the profits are made, are not able to tax these corporations. The money is moved to tax havens, where, by the way, those countries' governments are not collecting the tax either. So it's not a question of one country giving up taxes to another country. It's a question of nobody taxing these, or the tax havens providing this incentive for a very, very tiny advantage in terms of the actual taxes paid. So how do you get around this problem? When you think about it, it's actually quite simple logically, which is that you stop treating them as different companies. They are one company. Apple is one corporation. It has one set of shareholders, and it reports one set of global annual accounts. So it is one company. Why are we pretending that Apple France is different from Apple India for tax purposes? The idea then is that you set up what is called a system of unitary taxation with formulary apportionment. Okay, sounds awful, but it's actually a simple idea. You're treating Apple as one company, and you're saying the global profits of Apple will be distributed according to a formula. The formula that we at ICRICT have suggested is sales and employment, 60% sales, 40% employment. But this is a formula can be discussed. According to that, every country gets a share of the profits that would be the taxable revenue it can tax. And so every country will then tax its share of that total revenue according to its own tax rate. What does that do? That basically means multinationals pay the same tax rate as domestic companies. That's all it does. It's not charging them more. It's not being more exploitative or oppressive to multinationals. It's simply saying you have to pay the same rate as a domestic company. And that is something that, in fact, is not so difficult to implement. This is actually what happens in the states of the US, because every state in the US has a different fiscal regime. They're all allowed to have different direct and indirect taxes. So what every state does is it calculates its share of the profits of the company nationally. In the US, they use only sales. And on that basis, they then tax some of those profits, its share of the profits, if you like, according to whatever tax it imposes on the local companies. So this is something that is already existing. It's not some crazy socialist idea that has been thought of or something. It's a way to deal with the fact that when you have these jurisdictions, different jurisdictions with different rates, the inevitable tendency will be for private agents, corporations, or individuals to game the system. And this will be one way of reducing the ability to game the system. So that's one of the ideas. The other idea is that, look, if you still want to prevent tax competition, if you want to prevent multinationals from shopping around for the lowest tax rate, you also need to have a minimum tax that will set a floor that a corporation has to pay. And the idea of that minimum tax conceptually is that you actually are able to make that multinational pay the difference. So supposing, for example, there is a German multinational which decides that all of its profits are in Ireland, which has a very low tax rate, okay? The German multinational can pretend that it's only, that it has to only pay taxes in Ireland because it's all its profits are based in Ireland. The German government can say, well, listen, your global profits are this much. You are not paying that to the Irish. So I'm going to charge you the difference between that minimum tax rate and whatever you're paying to the Irish. This is actually something that happened. It was agreed. So I've identified the problem to you. Now, this problem is not new, but it became really sharply evident through the 1990s and 2000s, to the point where, in fact, in the early 2010s, 2013, in fact, the G20 mandated the OECD to take this up properly and figure out what to do about it. And the OECD embarked on a very long, protracted, and painful set of negotiations, which they called the Base Erosion and Profit Shifting, BEPS, BEPS, Base Erosion and Profit Shifting Initiative. And it was called an inclusive process. Why was it an inclusive process? Because they did this for a few years with just the OECD members. And then somebody told them, but hey, there are all these other countries that actually are affected by multinationals. So they invited a lot of countries on board. I think finally there were 142 countries. But basically they were included in the sense that they got to sit not at the high table. They didn't get to sit at the table where the decisions are made, but they were in the room. Okay, so it was inclusive in that sense. The OECD process took 9 long years. They were very painful negotiations. And it seemed like they were actually going to get somewhere, because both the points that I mentioned for multinational corporations, both of them were accepted in principle, which is a huge victory when you think about it, right? So it was finally accepted that multinationals should be paying the same rate as domestic companies, and therefore you need a unitary system of taxation with a formulaic apportionment, and that you need a minimum tax rate. The OECD is very fond of pillars. I don't know if you've noticed this. Everything they do, they have pillars. And Europeans love pillars for some reason. The Bank for International Settlements is always making pillars. Anyway, so pillar 1 was the unitary taxation, and pillar 2 was the minimum tax. And these were fiercely negotiated, but it seemed like we were getting progress until the last couple of months of the negotiations. At ICRIC, we were following this very closely, and we discovered that in the last couple of months, obviously, the big multinational players moved in and lobbied their governments and managed to get major changes. The US was instrumental in pushing these changes. So what was the big change for the unitary taxation? The principle was accepted, but then they said, well, it won't be for all MNCs, only the largest MNCs, those with more than 100 billion in assets and turnover and so on. And that ruled out most multinationals. So instead of 4,000, you're getting about 110 multinationals. And then then they said, and it won't be all the profits that will be available for distributing for taxing rights. It will only be what they call the residual profits. So what are residual profits? Apparently, they are profits above 10%. Now, that's bizarre. What's so special about 10%? And does any tax system in the world say that we're going to tax companies only if they make profits above 10%? No, there is no national tax system that has such a rule. But suddenly, this rule was put in that it has to be profits above 10%. And then further reduction, it not just above 10%, but of that much, much smaller amount, which is now available for distribution, only a quarter of that is actually going to be distributed for taxing rights. So you go from a number like, the estimation was anything in the range of between $270 to $500 billion. You go from that to about $11 billion. That's how much the dramatic reduction in bringing in all these clauses meant that kind of crazy dramatic reduction. Now, why was the US in these negotiations at all? It turns out the US multinationals were pushing the government for these negotiations because many countries that were frustrated with the inability to tax, especially the digital giants, Google and Amazon and etc., they had decided that they are going to impose what was called a digital service taxes, which is just a simple tax on turnover. So, you have a revenue of, say, 100 billion or, 10 billion. Let's say you have a revenue of 10 billion or 100 million in a country, 2%, 3%, up to a maximum, I think the highest one was 4%, is taxed. So it's a simple tax on revenue, but in general, it used to translate to a kind of between 15 to 18% tax on the profits, depending on how you estimate the profit, of course. The multinationals were very unhappy with this tax. And so they lobbied the US government to get involved in the negotiations actively. And it did so, watered down. And then the US walked away from the negotiations, having watered down the negotiations so dramatically. And of course, the fine print of those negotiations. Remember, I told you the developing countries were let into the room, but they were kind of let into the room rather than really given a major role to play. And this was especially true in the later part of the negotiations when delegates complained that they got, like thousands of pages on Monday and said, well, the decision is going to be taken on Thursday, so you better have read everything and be ready because, it's take it or leave it. This is the final. So that kind of pressure really meant that they were not able to adequately participate in the discussions and the negotiations. Then finally, that's the fate of the Pillar 1. The US walked away from it, and it's really dead in the water. It hasn't gone anywhere. The second one was the minimum tax rate. Now, that one actually succeeded. Again, pressure from multinationals and from the US government, led by its multinationals, brought it down to 15%. We at ICRIT, we had suggested 25%, which is the median of tax rates of corporates all over the world. Half the countries in the world have higher tax rates than that. Janet Yellen had suggested 21%, which is, it's lower than ours, but it's still reasonable. But pressure from some of the tax haven governments like Ireland and Singapore brought it down to 15%. So fine. So now you have a minimum to a tax of 15%, the globe. Let me explain what happens with the globe is that the country which is home to the multinational has the ability to tax the difference. If the multinational is making profits in some other country and paying a lower rate of tax, then they can say, well, you're paying only 5% tax there. I'm going to charge you that difference of 10%. That's if you're the home of the multinational. But in addition, and that really means the tax havens have no incentive to offer the lower rate, because why would you if some other country is going to take the benefit anyway? But also if you can show very significant economic presence, if you can show that there's a lot of economic activity in your country and yet that company is paying no tax, you can also then insist that you get the difference. And there are details about how this is to be worked out and who will get the taxing right and so on. It's a very, it's complicated, but it is not, it's not unreasonable. It can actually be handled. The US participated in GLOBE until Mr. Trump walked out. So not only has he walked out, he's now pushing other governments, including Europe, to not implement that for US companies. So I'll come back to that issue later, or we can take it up in the questions. So that's just in terms of what happened with the OECD. Now, because of the experience with the OECD, and the fact that developing countries really didn't have much of a say, it turns out that both of these resolutions or whatever, even the ones that were not implemented like Pillar 1, didn't work in their favor. They had to give up the taxing rights for digital services. They had to actually ensure that they would submit themselves to investor-state dispute settlement, which is an extremely egregious process that most developing countries have very little faith in, correctly. And so they were losers, really, in that. And our advice as ICRIT was for developing countries not to sign this until they could actually get a better deal. Anyway, dissatisfaction with the OECD process led to a major move by the African Union and the Group of Africa in the UN to push for a UN set of negotiations. And unbelievably, frankly, they managed it. They actually got agreement in the UN General Assembly, beginning with the OECD countries voting against. You had more and more of them succumbing, and eventually there were just, I think, a very few abstentions, the US and a few others, but otherwise everybody else voted for it. And it was agreed that the discussions and the negotiations would occur with majority voting, not consensus. Again, that's a huge victory, because otherwise one country can stop everything. And we know one rich, powerful country tries to stop everything anyway, but even a small tax haven can stop everything, an island or a Singapore or a Bermuda or something. So the UN tax negotiations, and I will stop here, because I want to get your questions and we can get going on that. The UN currently there are simultaneously three sets of things going on. One is the negotiations for the Framework Convention. Now, the Framework Convention is basically setting the idea that you will set guidelines in a whole range of taxing. And that covers everything. It's not just about multinationals or rich people or digital services or anything like that. It covers all areas. So it's a huge convention, but it's a framework. So it doesn't mean that you absolutely have to follow it. Every country is still free, of course, to have their own fiscal policy, their own tax strategy. But if some other country, if you have signed on to the convention and some other country is following those rules, you cannot bring a dispute against them. You cannot demand that they change, etc. Okay, so it's a pretty meaningful thing if it comes through. It would actually be quite significant. The second is that, so this is something that has to be negotiated over the next 3 years. Meanwhile, there are also negotiations on protocols, and at the moment there are 2 protocols being negotiated. One is specifically on taxing services, and the digital services, as you can imagine, are all important. And that is very interesting. That negotiation is very interesting because within that, you could actually once again bring in the idea of unitary taxation that was kind of, destroyed in the OECD process. You can bring that in a more meaningful way and in a more useful way for developing countries. And the second protocol is on dispute settlement. So many developing countries have got free trade agreements, comprehensive economic partnership agreements, bilateral investment treaties, all kinds of things where multinationals can sue the state. They can bring in litigation against a government. And they do that all the time, especially now about taxation, because the case law in all of these disputes is that taxation can be treated as a form of expropriation, which you can imagine that's a disaster, right? And that has meant that many developing countries are enmeshed in disputes because they signed on to one of these agreements. Some government earlier on signed on to one of these agreements. And the tribunals that address these disputes have been uniformly pro-investor. It's very, very rare for them to rule in favor of a state. They're always ruling in favor of investors. Many developing countries have withdrawn from some of these tribunals, like ICSID, the tribunal set up by the World Bank, and some of the private tribunals in Singapore and in Switzerland. So the second protocol that is being discussed and negotiated right now is on disputes. And finally, there are subcommittees, and these subcommittees cover everything. They cover everything from, types of indirect taxation, how to rationalize, how to prevent excess regressivity, how to do a wealth tax, how to even get the information you need to do the wealth tax, like, correct information on where assets are held and who the beneficial owners of the wealth are, and so on and so forth. So you can imagine how complex this process is. The US is not part of it, but the negotiations are going on in full swing. I'm told by negotiators that, it's actually better that the US is not there because they keep watering it down and then walking away. So this way you can try and get some agreement without them. But of course, the US is playing a negative role from the outside by trying to force companies through these tariff aggression type trade deals to agree not to tax US companies along these lines. So there is that concern as well. Okay, I think I've given you a basic background. Maybe we can get into some of your questions, and you can begin by asking questions. I also know the set of questions that Laura has raised, so I can come back to those as well.
Super. Thank you. You can use my thing as a microphone, and I will turn that sound off to avoid the echo. Anybody wants to start?
Wait, what should I do about that echo?
Hi, is anyone speaking? I can't hear anyone.
Oh, yes. Hi.
Oh, yeah, hi.
I'm Laura. Nice to
Oh,
meet you.
hi, Laura. By the way,
so much.
Laura, great questions. Really very good questions.
Sorry, we can't hear you. Give us a sec.
Okay.
Okay.
It's reinforced.
No,
Sorry, what did you say again?
I just said that your
Oh.
questions were really good. They were great questions. That's
Thank you. I appreciate that. I guess my main question, I think, hearing from you now, speaking about kind of what the convention actually produces, I'm still a little confused, and I think that's where a lot of my concerns about where does this lead, what's enforcement, what's the legitimacy behind whatever is going to be decided at the convention. I was hoping you could just walk me through that a little bit more, just because I feel like I'm not familiar with how the UN operates and international law. And so you were saying that if one country is signed on to whatever the framework is, they are protected against the court disputes or something along those lines. I guess what is the benefit of the framework, and what I guess real impact does it have besides being kind of a model?
Yeah. Can you hear me, Laura? Yeah. Okay. So that's an excellent question. And in fact, this is a question that many developing countries asked in the beginning. So I think the first point is this, is that actually all countries gain from agreements along these lines. And if you're looking purely at tax revenues, then the rich countries, the OECD countries, gain much more in terms of tax revenues than the developing world. So it's not that they are giving up taxes. Europe, US, nobody is giving up tax revenues. They will all get more than they get today, because today those taxes are not collected by anybody, right? So it's all essentially, it's really within countries. It's the political economy of governments being influenced by the rich, by the large multinational lobbies and by rich elites, rather than people who are mostly not even aware of this issue. So that's the reason why the rich country governments are not supporting certain things. It's because they would actually benefit. They would get much more in terms of revenue. Okay, so which is why a lot of European countries want this. There is a strange kind of realignment going on even in the UN negotiations. It's no longer the case that the European Union is negotiating as one, which is interesting, right? They're all actually, and there are many countries on opposite sides of this right now. So Switzerland, France, interestingly, Germany, etc., are very much on the side of the multinationals in that sense. They're opposing. But in France, I was in France just last week. In France, there is a huge groundswell of opinion in favor of bigger proper taxation of multinationals and a wealth tax for the very rich who also get away with paying no taxes. Okay, so I think these are things that the politics can change. So number one, what do rich countries get out of it? They get massive tax revenues. They will get the majority of the additional tax revenues. So it's not the case that they are losers from the process. They are net gainers like all the other governments. The difference is that for developing countries, those tax revenues matter even more. So it's a small amount relative to the total, but it's often very large compared to their budgets, compared to their, the money they get from other sources, and their ability to cope with the kinds of crises they're facing, right? Whether it is in food and fuel prices, or whether it's a health crisis, or whether it's climate change, they literally do not have the finances, and they know that all this aid stuff is going nowhere. In fact, it's going down the drain. So you really need to generate your domestic resources. And so this is one way that they see. That's why they are more keen on it, even though they get less relatively than the rich countries get in terms of, gaining additional tax revenues. Now, what does it mean legally? That's was your first question. What does it mean when you sign a convention like this? Signing a convention means agreeing to the broad elements of that framework. And so, for example, the WTO was set up by a treaty that was the GATT, right? The General Agreement on Trade and Tariffs. The UN framework conventions are slightly different. The UN FCCC, which you referenced, which has led to the COPs, the most recent one in Belém and so on, they are, or rather about to happen in Belém, these are framework conventions that provide guidelines. And so they're not necessarily binding in the same way. The WTO operates by saying that you can do cross retaliation. So if a country flouts the rules, you have a dispute against it. The dispute goes into adjudication. There's a tribunal. If the tribunal votes in your favor, you can cross retaliate against the country that has done the bad thing. Okay, so supposing you think that something they have done has flouted the WTO rules, the country that has won the case has the right to impose a sanction on some other imports of that country. Now, this sounds all right, but this is already skewed in favor of the powerful, right? Supposing Ghana and the US have a dispute. Let's say US brings a dispute against Ghana. If US wins the dispute, it can impose sanctions on Ghana legally. If Ghana wins the dispute, it can impose sanctions against the US. Can you see that happening? Not going to happen, right? So in other words, what seems all right in a very flat world doesn't work when the world is already full of power imbalances. So there is that problem. There is that fundamental problem. But the framework convention is important because if more and more countries sign on to it, it becomes much easier for an individual country to actually go ahead with that kind of tax reform. So you see, right now, for example, there is nothing stopping, say, Brazil from doing a unitary taxation of multinationals, declaring, well, look, so-and-so multinational, you're operating in my country. My share of your global profits, I'm calculating as this much. So I'm going to tax you that. Otherwise, you can't operate in my country. You don't need physical presence for that. I think you asked that question. If you are selling to my people, you have to pay this tax. If you don't want to sell, fine. Right? Now, it's going to be very difficult for Brazil to act alone. But the more countries are doing this, the easier it is for Brazil to act. You see, so it's that is the other important role it plays. But the third and critical role is really about disputes. I cannot tell you the number of disputes that developing country governments are embroiled in, because these multinational corporations hire thousands of lawyers and accountants whose whole job is what they call tax planning, which is really, legal tax avoidance measures, and getting after companies and countries that they can, intimidate through these kinds of processes. If you are freed from that, that allows you much, obviously within rules and norms, you're not really going to expropriate, but you're just imposing taxes that the same as you're imposing on your domestic companies. Then that gives a whole bunch of countries a lot more room for maneuver. So that's the role that these protocols and the convention could play.
Thank you.
Hello, thank you so
Hi.
much for coming. I just had,
I don't know your name, darling.
oh, I'm Marianne. Nice to
Okay.
meet you.
Yeah.
I'm a senior. I was just wondering, or I think there's still an echo. Oh, okay, perfect. I was wondering why, how the people, like these negotiators and representatives in the UN are selected, and how, why it's so easy for them to be influenced by these multinationals companies, and if they're why they're not acting in the best interest of governments, if it's true that these taxes would benefit the governments, why are they not acting in the best interest of the governments? How are they so widely influenced? I don't know if they're elected or how the kind of selection process is for that, or what the influence of these multinationals, if it's related to donations or stuff like that.
Yeah, that's a very interesting point. So negotiators are always 100% appointed by governments. Okay. And I've met many negotiators. Many of them are often middle-level people in the tax system. So, they are people who've been in the domestic tax system, and they're often very sincere and very dedicated and committed and so on. But the ultimate decisions are made higher up. Yeah, I've seen this with the Indian negotiating team. You know, we had really excellent, dedicated negotiators, but at the last minute, they would get a message from New Delhi, you go with the existing proposal. Okay, so it really means that the influence of the MNCs is not on the negotiators themselves, it's on the state. And that, I mean, I guess we know that, right? We know that there's a nexus between economic and political power, which operates in all kinds of ways. It operates certainly through donations, it operates through other kinds of kickbacks, it operates through, well, private corruption. Yeah, that, you know, your nephews, nieces, grandchildren, etc., all get benefits from it, and so on. So I wouldn't blame negotiators per se. I really would blame the political economy of the state, you know, which is not always bad, by the way. That's the other thing that, and sometimes it even works the other way. I remember Jose Antonio Ocampo, who was the previous chair of ICRIC and is still a member of the commission. He was the finance minister of Colombia briefly, right? And he managed to do a lot. He managed to do a really impressive tax reform in just 9 months. But he had to fight like hell with the bureaucrats in Colombia and the negotiators. He had to shift, he had to bring some of them back and bring other people whom he could trust. Because, you know, there is a whole system that is set up by power, if you like. And so the previous government, which was a right-wing government, had made sure that everybody everywhere was, you know, basically promoting the interests of large capital and rich people. And so fighting against that takes a lot of work, and it's not very easy because you're then also fighting an entire bureaucracy in a way, or not entire, but, you know, many in the bureaucracy. So it's complicated. I would put it this way. I think states are always, they are always terrains of contestation. Okay. And so it's not that they're only representing the interests of the big guys, but certainly the big guys are in there pushing their interests and tend to be more influential. There is pushback. If there isn't enough pushback, then those guys will win. If there's enough pushback, then the state says, okay, we have to give them this, we have to give them that, you know?
Okay, that sounds good. I have kind of two follow-up questions. My first follow-up question is like, what does pushback look like? And is this kind of pushback like something that only exists on the governmental level? Or is this like who has the power to like kind of execute these kinds of pushback? That's my first question. And then my second kind of follow-up is like, it seems that the only country that would have an interest in protecting these multinationals is the US. So I'm a bit confused. Like you mentioned like France and Switzerland. I can't imagine that there are like that many multinationals in France and Switzerland. And like these countries seem like countries that would like almost like exclusively benefit from like the unitary tax rate that you were talking about earlier. So I'm wondering why like other countries besides the US kind of have a vested interest in protecting these multinationals.
Yeah, both very good questions. Let me take the second one first. You know, no, the US is not the only country. Look, Switzerland has these multinational banks. I mean, now it has one really, because the other one got taken over by the first one. And say it had a massive bailout from the state, Credit Suisse, and it got taken over by UBS, etc. But it has the financial multinationals. It has the drug multinationals, pharma. Okay, and because Switzerland and some cantons in particular are kind of tax havens, a lot of the multinationals declare their home to be Switzerland. Okay, France also has a bunch of multinationals. Think what's the luxury lot? You know, the richest man, currently the richest man in the world, actually, or no, number 3 or 4. But the Louis Vuitton guy, yeah, I've forgotten the name of the company, but you know the one I mean, right? Anyway, who is currently lobbying against the wealth tax in France, okay? He is a major player in French politics in the terms of influence, not in terms of, shall we say, he doesn't actually, he's not in politics himself, but he's out there lobbying the hell out. So when you talk about pushback, you know, there are two, I mean, very, very broadly, there are two forces. There are, if you like, the forces that would like to perpetuate the status quo. And those are multinationals, rich people, the usual suspects. And that pushback happens through lobbying. It happens quietly. It happens at dinner parties and meetings in government buildings or in restaurants or whatever. It doesn't happen publicly. But the other pushback is quite literally on the streets. And we have seen this in many countries, various countries recently where some tax laws had to be revoked because people just went out and said no and rioted. Kenya, Ghana, you got a change of government, in fact, in Senegal and Ghana because of, public reaction. You're getting huge protests at the moment in Indonesia. We have to see what comes of those. You're too young to remember, but there was a proposal to have a Europe-US trade deal. It was called TTIP, the Transatlantic Trade Partnership and Trade and Investment Partnership. And massive protests in Europe, which actually, killed it. So pushback can happen. It's not only from the big guys, as I said. It can happen through popular movements if there is enough of a noise. And interestingly, it can even happen in authoritarian governments. So, we have this notion that authoritarian governments can do just what they like. Often they can't, because the very fact that they're authoritarian means that they have to compensate the people in some other way. Either more secure living standards or better public provision or some compensation. There has to be some kind of quid pro quo for the fact that they're controlling you and denying you freedom in other ways. So the pushback happens in both these forms, very, very broadly. Of course, within that, there are lots of, specific types. So yes, the US is not the only country. A lot of European countries are home to major multinationals, and they may be few, but they're very significant for that country. So that company will have disproportionate power and influence, which explains a lot of how many European governments behave. Because in France, it's very unpopular not to tax multinationals or not to tax the rich. 85% in the recent poll, 85% of French people wanted a tax on the very wealthy. But the government says no, right? So
Yeah, that makes sense. Thank you.
Maybe give it to you.
Um, Hi, thank you so much for coming in. My name is Ajay. I just had a question based on kind of what you had just said about a lot of multinational companies declaring like countries like Switzerland or other tax havens as their like home base, so to speak. Do you think this provision will have any impact on where these companies choose to incorporate, and if that is driving whether or not these countries are supporting this convention?
it would have huge impact, because supposing Hoffmann La Roche or one of the Novartis, these are all Swiss companies. Supposing they somehow, they've not been paying very much taxation in Switzerland, but the companies where they're selling and the companies where they make their drugs, the countries where they're selling and where they make their drugs, those governments now say, well, we are going to do unitary taxation. That's huge for them, right? Then there's no great benefit in declaring Switzerland to be your home, because they can tax that company at Novartis at the same rate that they tax their own domestic company. So,
Right.
the big advantage that multinationals have is jurisdiction hopping. It's a bigger advantage than all the other economies of scale and scope and everything that people talk about. It's the biggest advantage, regulatory arbitrage. If you lose that with regard to taxation, then that particular advantage is, gone. So yeah, they would have a lot, I won't say to lose, but certainly they would have to pay taxes like everybody else. Let me put it that way. Yeah.
Right. So then,
No, go ahead.
so then would these companies then choose to incorporate in the countries that they're like doing most of their manufacturing and selling? And then would that not be a loss to maybe the country of Switzerland and give them a disadvantage or disincentive to sign on to the convention?
Well, that's usually what is argued. And that was why Ireland, Singapore, they're the big tax havens, actually. Yeah, Ireland, Singapore, and a few states in the US, Nevada, Delaware, where Joe Biden comes from. These are huge tax havens. Okay. Now, yes, it's often argued that if you do this, I mean, that these tax haven countries will not sign on. Okay. The thing is that if you are a tax haven country and you don't sign on, but all the others do, it doesn't help you, right? You're still sunk in a way. So it's in your own interest to sign on. And if your employment generation is based entirely on somebody claiming that you are their home, even when it isn't actually the case, because much of this residence is fictitious, right? I mean, there are buildings in Dublin that host thousands of companies. So, it's really just a mailbox in that sense. Or in the Netherlands, that's another tax haven in Europe. So it's not necessarily a huge benefit for you. Yeah. In fact, the tropical islands where, which are generally seen as tax havens, they maybe get a little bit more benefit because at least people have some summer homes there or, they winter homes there and they have their yachts and, things like that. But in most of these tax havens, there isn't, it's a very, shall I say, it's a real beggar thy neighbor policy where, you're attracting rich people to come and stay in the often false hope that that will generate a lot more economic activity. Yeah?
Okay, thank you.
Hi, thank you for joining us today. My name is Harvey. I just kind of wanted to ask you kind of a follow-up question or kind of a counter argument question about your example with Brazil and Apple. So is there a credible counter argument to be made that while multinational corporations often avoid paying taxes in the jurisdictions that they operate in, especially in developing economies, isn't it the case, though, that multinational corporations employ people in developing economies? So their right to no longer do business given tax avoidance may damage like local payroll. Is that an element?
Okay, yes, no, that's again very much an argument that the multinational corporations make, that look, we're doing all this good to that economy, but there are different levels of this argument. So one is about digital services. So Apple is really making money in Brazil by selling. It's not making anything, right? So it's not really employing anybody in Brazil, but it is selling a lot. And it's not really paying taxes on the profits it makes from selling in Brazil. So if Brazil says, well, wait a minute, you are selling all these computers and everything else to me, but I'm not able to get any tax revenue, and you're not actually paying that tax revenue anywhere else either, then that's a reasonable proposition, right? And that's true of a lot of digital services, because a lot of the digital services don't really employ people directly anymore. Even the platforms, I mean, Uber, it employs what? Max 2,000 people globally is the total employment of Uber, because everybody else is a contractor, right? Similarly, there is the other kind of multinational, which is largely extractive. Now, that's a whole different deal. The oil companies, the mineral extracting companies, the copper companies, et cetera, they would not exist without the natural resource. But often they end up paying almost no tax because they use very capital intensive technology, which employs very few people. And they don't, they will claim that the technology has all of this, patents, and I have to pay royalties to my home office in the Netherlands. So I don't make really any profits from extraction here, when their global profits are huge. Yeah? This is true of pretty much all the petroleum companies and the major mining companies and so on. Then there's the third category of companies, which does employ people. Again, Apple employs people not necessarily in Brazil, but certainly in Taiwan, China, or in other countries. And the argument is, would they lose? Now, here is where the choice of location is increasingly not, I mean, the choice of where you're producing is determined by all kinds of things. You know, the infrastructure of that country, the relative cheapness of that labor, how skilled it is, what other kinds of benefits you may get from operating there, but not the fiscal one. Because the fiscal one, they've already gamed. You know, the tax benefit thing, they've already gamed that tax benefit. So even if you have a high tax rate, they're not paying it because they just simply claim they have low profits in your country. So the choice of that location is because it's giving you something beyond the tax benefit. So if you do impose the tax, that benefit will still remain. Do you see what I'm saying?
Yeah.
Yeah.
I guess so. I mean, I'm not very knowledgeable about tax law at all, but how does like value added tax or VAT on top of the price of the good factor in to that calculation?
Okay, so VAT is a price on the product, okay? And so it is what is called an indirect tax. And indirect taxes are typically paid by the consumer, okay? And the consumer, it depends on the elasticity of demand for the good and blah, blah, blah. But in general, VAT taxes and similar indirect taxes are seen, import tariffs are seen as regressive. They fall disproportionately on poorer sections who consume more. And they don't necessarily hit the producer at all. Okay. It's an entirely different category of taxation. We are talking about actually putting more emphasis on direct taxes where you can have some control about who pays the direct tax and where you would try and make it more progressive. That is, you would have the tax rate going up as incomes go up or profits go up or assets go up or whatever. And in that one, in the direct taxes, the possibility of passing it on, it's always there. You can say, because I have to pay so much more tax, I'm going to raise my prices. But that's a much more complex kind of calculation. And you have to think about what your competitor company is doing and stuff like that, right? The digital services taxes that I mentioned. Now, those are actually, again, it was argued, these are taxes that will fall on the consumer. But it's interesting because no, they won't. Say Facebook, or what is it called, Meta. Meta is the company that runs Facebook, WhatsApp, et cetera, right? What's the cost of using Meta? Zero for the consumer, except of course you're giving away your data. So in a sense, you are the profit or you are the commodity that is being sold because you're giving away information about yourself. But the company is making its revenues by selling that information about you to advertisers. So if you impose a digital service tax, it does not affect the consumers.
Okay, that was very helpful.
Hello, thank you for coming today. My name is Abraham. So I have, I guess, two questions. One that are not really related. One is about just measurement. So as you kind of noted briefly, there's a problem with, especially given tax havens, like actually understanding where all the assets are, how much profit or revenue any particular corporation is bringing in. So it seems like that the measurement problem, I mean, always exists, but it seems to really exist on this kind of model. So maybe you could speak to a little bit about maybe what are some, because so many assets potentially are just, it's not known where they are or what their quantities are. So maybe you could speak to how problematic that problem is for this proposal and maybe what possible ways forward there are. And then the other question I had was just about, so this doesn't seem to be the case, but I'm wondering why it isn't. It seems like richer countries, particularly like the United States, should have a deep, deep interest in this kind of international scheme working, because, I mean, it's relative to how much we ought to be taxing them in terms of just how much they contribute to our economy, we're not. So the United States government's losing a lot of money because of the ability of these corporations to move their money around to subsidiaries in other jurisdictions. So why is it that we're acting in a way that's like directly contrary to our interest, it seems like, particularly because we were the ones that watered down the negotiations. So I'm kind of confused there.
Yeah, very, very good question. Okay, let's go to measurement first. You're absolutely right. It's so difficult to figure out what is actually going on in terms of where the money is flowing, who's doing what, etc. Because these multinationals, they cook the books for sure. They claim that there's this much royalty payment, there's this much interest payment, and it's all within the company, so they can make up any number that they like. But also, and they've hired, as I said, thousands. I mean, any big multinational has got literally thousands, sometimes 10, 20,000 employees just doing this full time, right? So how do we solve it? Well, the good news is that you can solve it, and especially we have seen recently, just a second, excuse me, yeah. Sorry about this. Yeah. So the good news is that we now have at least much better information than we had even a few years ago. So part of the OECD process, one of the things that they actually managed to get was something called the automatic exchange of banking information. Okay. And this involved a common reporting standard of country by country reporting for every company, exactly where they got how much and where it went. Now, this is actually now, in a world of digitalized finance, this is very easy to get, but it was not previously shared. We now have 142 countries in this common reporting standard, which is huge. Yeah, sure, there are some tax havens missing, but if it's going to a tax haven, you know it from a non-tax haven country. Yeah. And this has actually made a huge difference. So there is a book, a report actually that I've mentioned. I think I sent in the reference a bit late. It's the Global Tax Evasion Report brought out by the EU Tax Observatory, which if you look at that, it's really very interesting. It shows how much of a decline there has been in the untaxed wealth and in the untaxed movements of corporations because of this country by country reporting. It's still not perfect, but it's made a huge difference because you can do it for individuals and for companies. And once it's true, financial wealth is not the only source of wealth, and you can still tuck away lots of money in these tax havens. And the US, typical, has not joined. So the US gets everybody else's information, but it does not share any information. Okay, and that leads to your second question. But nonetheless, already we are now able, through this CBCR, to actually identify where multinationals are parking a lot of their reserves and there's excess profits. If they claim that they paid this much in interest from a company, another subsidiary, if Amazon claims they had to pay so much in interest because they took a loan from Amazon Italy, yeah, you can easily compare and say, wait a minute, that is like 20 times the prevailing interest rate. So do you see what I'm saying? So in other words, once you have that kind of detail of the financial transactions of every company by country, by purpose, which is available now, if you're a dedicated, tax authority, you can go ahead and do something about it. And again, I mentioned Colombia when Jose Antonio Ocampo was the finance minister. That is one of the things they did. They used, because Colombia is a member of the OECD and a member of this common reporting standard. So they actually used this country by country data to tax the very wealthy. They had a slightly gradated tax on the extreme wealthy. I think you had to have $50 million equivalent. But they could say, we're going to tax you on this wealth wherever it is held. Because now we know where you hold it, at least some of the financial wealth. I mean, maybe you have paintings and racehorses that we don't know about, but we do know about your financial wealth. So we're going to tax that wealth wherever you hold it. And they managed to get, I think it was 0.75% of GDP in the first year, which is not a bad sum, actually, considering you're really taxing very few people, like, I mean, a few thousand people at most. So that's the good news. However, and there's always a however, right? The problem is really now not so much that as the existence of shadow companies and trusts. So companies, some of them, these multinationals, they are not just in the offices where we think they are. They set up pseudo companies all over, especially in tax havens, and they have a lot of transactions with those pseudo companies. The wealthy do the same. They set up companies and they also have trusts. Now, the thing about trusts is that they are really opaque. So the trust is registered in the name of whoever is somebody registers the trust, but that person is typically the lawyer or accountant of the real owner. Is the manager of the trust. And this is a very common practice for the very wealthy. This is what they do. They set up a trust for their children, a trust for their grandchildren, a trust, for the wife, or in their own name in case they get divorced and they don't want to share the money, whatever. They set up these trusts and the beneficial owner is not known. So what we really have to have is for every country to demand that all the trusts reveal their beneficial owners. And it can be done. Scotland has done it recently, for example. And some other countries already have that rule, but a lot of countries don't. But if every country is forced to, if every country says you have to reveal the beneficial owner, you can't simply say that it's these people who are the directors or the managers of the trust. And if that information is shared across jurisdictions, then you would be in a position to do proper taxation of wealth. Yeah. Again, there is hope for it. Look, if you think about all the vested interests involved, you would say, oh, you're never going to get country by country reporting. You're never going to get automatic exchange of banking information. I was among the people who said, it's not going to happen. It happened. And it is happening as we speak. Countries are sharing this information. So, there is some good news. It's not all terrible. As I told you earlier, the US is not part of it. And this is pre-Trump. This is not just Mr. Donald being the bad guy. This is actually a long-standing tradition of the US that it really is not a good participant in multilateral negotiations, a good faith participant, shall we say. So the question you've asked, why don't richer countries have more interest, and particularly the US, but also some other of the rich countries, is because their governments are not operating in the interests of the people. Let me be honest about this. Because the US, look, if there is periodic outcry about the budget deficit, there's this ridiculous budget ceiling you have. The whole question is about whether you can raise the limit on the deficit. Nobody talks about the possibility of raising resources. And the fact that you are letting a whole lot of resources go untaxed out of choice. It's a political choice. It is not an economic necessity in any way. It's a political choice. But first of all, it's not recognized by most of the ordinary people, so they don't see it even as a thing to ask for. Secondly, there's a lot of media disinformation about how this is all rewards for incentives for innovation, etc., which is nonsense, because the very wealthy in the US now dominantly earned money through inheritance or through just rentier income. So Bill Gates multiplied his income 5 times after he left Microsoft. Because you put your money in finance and it keeps growing and growing and growing, right? And then you can influence policies to make sure that it grows and grows and grows. So there is a whole political economy about this. Because it is, frankly, to me, it is not just surprising, but it's a little obscene that the US government is so openly in favor of its own large corporations, even when it is at the expense of US citizens, when all of the talk of politicians on both sides of the aisle is how they're really concerned about the American people and, etc. The reality is quite the opposite. You're muted. I think there's a microphone. You have to press that. It's
Thank you so much.
yeah.
My name is Ndalk. Thank you for the opportunity. So you've said that, I mean, the international arrangement or the framework arrangement, it's already failed, or it seems that
The OECD one. The OECD one. Yeah. Yes, no, I was saying when international arrangement, you mean the OECD arrangement.
no, specifically the unitary taxation system proposal. Yeah, that's what. So for that, it fails. And if we don't have the framework arrangement to have the unitary taxation, I wanted to focus on the least developed countries. So to levy taxation on companies, especially multinational corporations, we need to have tax residence. So for that, specifically the digital companies like that Meta, it is difficult to collect tax from them as at least developed countries. So I know that some countries like that of Brazil or India, based on the principle of significant economic presence, they try to collect taxes from these companies. But when it comes to least developed countries, let's say countries in sub-Saharan Africa, they don't have the bargaining power. They don't have, of course, the arrangement even to levy tax or to access tax. And these companies, most of the time, what they do is they create a kind of, branch offices. Let's say if it is like East Africa, they will open an office in Kenya. It could be if it is like South Asia, they will preferably open an office, like a single office in one country, and they try to reach out countries around there. So now, based on your understanding and expertise, what would be the solution for these countries? I mean, should they do like a kind of, or use this significant economic presence principle to levy or to collect taxes from these companies? Is that possible? Or if they do shut down these companies not to operate in their jurisdiction, what will happen? Like, because there are striking interests. One, either like collecting taxes from these companies. If we shut down, or if this country shut down these companies, still there are people who are like exercising their rights of access to information, getting different informations, even having a kind of small businesses over the platform of such kind of issues. So what would be the solutions if the international arrangement, especially this framework arrangement, fails, and if countries still are not able to, especially least developed countries, are not able to collect taxes from these companies? What would be the solution? Thank you so much.
Yeah, again, very good question, and something that a lot of African negotiators have also been asking, exactly. Because the OECD negotiations themselves, as you know, they went on for a very long time. And then finally, they didn't result in a resolution, which was deeply frustrating. And of course, the minimum tax, 15%, is so small that, it really doesn't benefit most African countries for sure. Now, the issue then is, how would you levy a tax? And in this situation, especially for digital companies, the solution is the digital service tax. Okay, it is an indirect tax. It's a tax on the turnover, but it is actually, in this case, it doesn't have the same regressive effect. In fact, the countries that have imposed it have found that it doesn't have a regressive effect, because it's actually falling on the advertisers. It's not really falling on the people who are consuming the service. Because, as I said, they're giving the data rather as payment. They're giving their own data as payment rather than any price. A digital service tax has the advantage that you don't need physical presence. It's just every time you use the service, there's a tax on it. Could be a very small one. Usually they're in the range of 2%. But it's basically a tax on the turnover. And that translates into a way of forcing the multinational to pay at least some proportion of its profits. Where you are right is that sub-Saharan Africa has no bargaining power. So if you do impose a DST, it is possible that the company, let's say Meta, says, well, then I won't come to Burkina Faso or to some other country because you're imposing the DST. And that's why it is very important to coordinate. And this is something, by the way, I know the African Union is seriously considering. So the group of African countries was very active in pushing for the work in the UN to happen at all, and the UN Framework Convention, etc. But many countries in Africa, Kenya, Nigeria, Egypt, actually did impose, no, not Kenya, actually, Nigeria and Egypt for sure imposed digital service taxes. And what they are saying is that we should actually have an Africa Union-wide imposition of DST, because then smaller countries who are frightened or worried about the impact and so on would definitely benefit from this. So this requires, I mean, it's very difficult in today's world for individual countries to manage on their own. But working together actually has huge benefits. And particularly the African Union is in a very strong position with regard to the digital companies because it's one of the fastest growing markets. It may be a lower base, but it is one of the fastest growing, and no major multinational would like to be out of it. So certainly for the service companies, the digital companies, they would not be interested in losing access to the market. And if it's an African Union-wide tax, then there is much more possibility of it going through and having significant positive impacts for revenue effects for the countries. I don't know. I mean, I have just been talking about, I haven't talked about one issue that I know some of you will be interested in, which is the issue of, the US current role. But I don't know if there's any other point. Christian, perhaps Christian would like to come in with some comments as well.
Portable mic.
So, Jayati, you have covered, I think, many of the fundamental issues relating to the UN framework. I think we have a couple more questions, maybe from Laura. Yeah, you can come here. And then I think, Jayati, we can excuse you. I know you have a lot of commitments. I will make some general remarks to the group on the genesis of tax havens, on transfer pricing, and my experience in working with PwC. But let's have Laura's question first, and then we can wrap this session up, and then let you get back to your classes, and then take it from there.
Oh.
Come on.
Hi, I have two more questions. They're not necessarily related, but hopefully they can be quick. So you mentioned that the multinational corporations bring like cases against developing countries, and I guess I'm curious what the grounds of that are, like under what laws or just reasonings, like what is the charge, I guess. And then the second question is, I think you kind of touched on this earlier, like how these MNCs can be obligated to pay if there are no physical assets in the country. And I think you mentioned this with the digital service tax, but I'm also curious, like you mentioned Colombia, my parents are from Colombia, and I was really curious how they even like collected the high income tax on like assets that seem to not be in the country. I'm just like, you mentioned like it collected like a percentage of the GDP like last year. I'm curious about how you even like enforce and collect those taxes when you can't per se like put a lien on a property or something like that.
Great, yes. So, the way that multinationals typically prevent anything that they see as, excessive taxation, which means paying the same as everybody else, is through using a clause relating to what is called expropriation. Okay, so typically bilateral investment treaties were set up to prevent nationalization of industries and so on. That's the origin of how bilateral investment treaties came up, because multinational companies said, oh, if I come into your country, you may suddenly decide to nationalize my company and then I'll be stuck, which is called expropriation. Now, over time, the concept of expropriation has been expanded and expanded way beyond that original intent. So it now covers all kinds of things. If you have a pollution regulation, for example, a multinational can claim that that's expropriation because you're making them spend more on various regulations and things on various things that would make them less polluting. This was a case in Mexico. A municipality sued a US corporation, or rather, it told a US corporation that it could not continue with polluting water, which was affecting a municipality downstream. And the company brought a case against Mexico. In this case, it was under NAFTA, the North American Free Trade Agreement. But you could do it, they could have done it under a bilateral investment treaty as well, and said that you're expropriating. So typically, the notion of expropriation has been expanded way beyond anything. The notion of investment has been expanded. So it includes now not just physical investment, it includes financial investments, it includes insurance companies, etc. It includes intellectual property. Everything is an investment. And anything can be seen as expropriation. So taxation is a prime candidate. If you have to pay more taxes, you say, oh, it's expropriation. And you can file a case saying that you are effectively expropriating because you're denying me my full profits by taxing me. And as I said, even when the taxation amounts to the same tax that you're imposing on a domestic company, we have many, many instances of the tribunals basically judging in favor of the multinational corporation. And I could give you lots of instances, but there are many cases. Dutch companies are very good at, a bunch of companies do this a lot. Okay, so that's and one of the reasons why this the issue of dispute settlement was taken as an early protocol is because developing countries are really sick of this. And there are so many bilateral investment treaties, there are around 2,000 of them, not to mention all the other economic partnership agreements, which increasingly have that investment chapter with all of these notions of expropriation and so on. So they really want a common kind of acceptance of the things that would qualify as and what the individual dispute settlement things that they're bogged down in, so that even when you leave a treaty, you say, I've reneged on my treaty, you're still bound by something, a company that was operating before that date. So they really now want to make some clarity and some minimal fairness in the way that these treaties operate. So that's on the issue of expropriation. So with Colombia and with any country that imposes a wealth tax, you can only impose on people who are defined as tax resident.
Okay, right.
So if somebody has moved, then you cannot. Although the French proposal is to impose an exit tax, which a bunch of other countries have. In fact, France also has a small exit tax. But the French proposal is, so a lot of these rich guys, including what's his name? The guy who is Louis Vuitton, they are threatening to leave. They say, oh, you're going to do a wealth tax of 2%. That's terrible. I'm going to leave. And the proposal here is that, okay, fine, you can leave, but you lived all your life. Let's say you lived 40 years, you earned money 40 years in France, so you will have to keep paying for this amount because of all the money you made in France. So either you can give the whole amount now, or you can pay it over 5 years or 10 years or whatever. So it doesn't exempt you. Of course, the only way to enforce it would be to say, well, as long as you come back to France even to visit, you'd have to pay the tax, which can work for France because there will be many people who will say, well, I got to visit my family and friends in Paris or something. So, you could still enforce this. But in the Colombia case, this was a tax imposed only on those who were defined as tax resident in Colombia. And these are the very rich who keep a lot of money stashed everywhere else. And because of that, common reporting standard, they were able to identify at least some of that money, probably not all. But they said, well, listen, we know you've got, you say you have only 35 million in Colombia, but we have seen from these records that you've got another 100 million in various accounts in Switzerland and elsewhere. So we are taxing you 1.5%. I think that was the threshold rate on that.
That makes sense.
Can I ask a question?
Yeah,
Sorry.
of course, James.
Okay. I wanted to congratulate you on a great presentation. Worldwide, we collect about $21 trillion of tax revenue.
Mm-hmm.
Only about 3 trillion of that comes from corporate taxes. And so we have these other taxes that are also in need of attention, but they don't seem to get much attention from the tax justice and NGOs and ICRID and so forth. So we have sales tax evasion, we have transactions taxes on stocks and other instruments, and the volumes there are soaring. We now have about $500 trillion a year of, if you add up stocks and crypto and derivatives and gold. New York State, my home state, has a 0.1001% tax on stock trades, about 40% of the world. We generate now about $50 billion of taxes, but we give it all back to Wall Street.
Mm.
So anyway, my point is, I'm struck by the concentration on the corporate income tax. I think it's a worthy cause. That we have 37 U.S. states that have had formulary apportionment and unitary taxation since basically the 1930s. They have struggled really to make it work. The other area you mentioned here that I just wanted to highlight is the wealth tax, and that is on the personal side of things. I've done a lot of work with Tax Justice Network on trying to estimate the size of offshore wealth that's privately owned and beyond the reach of tax authorities. Zuckman and I have had this long-term fight about it, but I think he's coming around to the view that most of us think is that it's somewhere north of $50 trillion a year of offshore wealth. This is evading taxation by being parked in havens. So that kind of emphasizes the need for doing something about personal income tax evasion and having a global compact. Maybe it's a shared wealth tax. I don't know. I mean, some people say that wealth tax is a full employment program for lawyers, it basically with all these havens available. Anyway, your perspective on these other taxes and what we can do about them, including the transactions tax, I think that would be of interest here.
Yeah, absolutely right, James. So, ICRIT was born, if you like. It originated with the idea of looking at the corporate taxation, and it has heavily focused on that also because the OECD process had been going, and we really wanted to be influenced in that, and we were very delighted, in fact, that the basic principles that we were putting forward were accepted by the OECD. So I think that drove a lot of the ICRIT activities in the first 6 years, really. But actually, over the last 3 years, we have also diversified into wealth tax. And we are really looking, and Gabriel Zuckman is in fact one of our commissioners. Piketty and Zuckman are both commissioners. And we are really very, very interested in the potential of wealth tax. And there is a proposal that Gabriel has made for a minimum tax of 2% on wealth, which is not to be shared globally. It is that it's the same principle as the minimum corporate tax. That if you know that the person has got wealth held elsewhere and is not paying any tax on that, he or she, then you can tax the difference domestically if they are tax resident. So we are very much engaged in that, and we are also actively lobbying in France for which I was just in a meeting also with the French Assembly where we were talking about the benefits of the wealth tax. So yes, very much we are looking at wealth taxation as well.
Hmm.
We have recently changed our name, by the way. It's no longer the Independent Commission for the for International Corporate Taxation. It's the Independent Commission for International Capital Taxation.
Excellent.
Which
Great.
is kind of trying to capture the fact that we have expanded our interests. And some of the things you've mentioned, particularly crypto, are definitely on the agenda. It came up in our latest meeting. I think Krishan can testify to that. We are definitely interested in looking at the implications of crypto and derivative taxing and the other things that you mentioned. The problems with transaction tax, again, something that we have to look at and which have been mentioned. So these are items on our agenda. I have to say sales tax evasion we have not looked into, but it's very much part of the transfer pricing thing from our perspective because we have been more global in the orientation. So the sales tax evasion could also be related to the transfer pricing concerns.
Right.
And could be reduced if you kind of bring those concerns down a little bit. But we're also thinking about some of the other, the so-called new taxes that are being thought of, the solidarity taxes, some of which are fine and some of which are very problematic. So I think that's another agenda item that we would like to take up, which is that some of the solidarity taxes, for example, levies on private jets and so on, are fine and obvious and definitely desirable. Some others potentially are more problematic because they are either regressive or protectionist. So we're trying to, we are going to take up many of these issues. And as you can see, taxation is such a huge thing, but we can't cover everything. But our focus broadly is on how to make taxation more progressive and particularly, therefore, the taxation of capital.
Great.
Excellent.
Thank you.
Jim, if I can interrupt for a minute. We have in a few minutes left, and one of the students has another question. Can I just turn it over to her?
Yes, sure.
Yeah, Jayati, please go ahead.
Hi, I'm Krisha. Thank you for coming in today. I have two questions. The first is there seem to be two methods of structuring corporate behavior. So you can either tax or you can basically provide subsidies. And I think that was one of the strengths of the IRA under Biden because they basically incentivized climate tech off of IRA subsidies. And I think one of the issues with the taxation method versus the subsidy method is with subsidies, you can kind of predict corporate behavior and you kind of know what the consequences of the subsidies are going to be and what markets are going to flourish. But with taxation, there may be some unintended consequences to you restructuring kind of the corporate tax code. And to your point in which the US has had such a history of being favorable to basically corporate tax avoidance, how does drastically restructuring the US tax code change corporate behavior, or are there unintended consequences that are potentially there? And are there ways of measuring those unintended consequences? Because I agree that tax reform is probably the most substantial method in creating corporate behavior change, but those unintended consequences are really hard to reckon with, especially when subsidies are available. It's just those subsidies are not as potent, I think.
Yeah. So, the IRA, something that was reversed so quickly cannot be called a success, right? Sadly. But I think there was another deeper problem with it, which is that the nature of the IRS subsidies, one of the people who was involved in creating or assisting in creating the IRA called it a system of endless mimosas or bottomless mimosas. You basically keep, the more you spend on this, you will keep getting subsidized for whatever. Now, it turns out that was neither economically nor politically sufficient to actually engender a significant change in corporate behavior. Contrast this with China, where you did get very significant change in corporate behavior. And it's not because China is an authoritarian state and punished anyone who didn't. It's because the market incentives were structured otherwise. So I would say that the failure of the IRA was because it just offered an incentive without thinking of the ecosystem that would generate that broader thing, which has to be combined with, let's say, public investment in the essential infrastructure. So you can't just give subsidy to Tesla. You have to make sure there are charging stations. You have to have competitors to Tesla. You have to have all of those kinds of things. You have to ensure finance in the appropriate way. That is to say, not unconditional and we'll just give it to you because we love you, and it doesn't matter after that what you do and how you price it and that there are no conditions attached to the finance we give you, and that it did not actually ensure returns for the governments that were providing the subsidies. I mean, Mariana Mazzucato has made the obvious point that, look, if you're going to give all this money to Tesla, the state funded 75% of the initial investment, why didn't they at least keep some shares? Why didn't they behave like a normal venture capitalist? And so I would say that the IRA was lacking in many ways. It didn't create an ecosystem. It didn't have a system of incentives that shaped the market. And it provided excessive subsidies to particular favored recipients or regions that they thought would benefit, without ensuring that those would be long-term viable. So I think there are reasons why a pure subsidy regime is not necessarily the best regime. Taxation is partly a way of influencing corporate behavior, but hey, it's also a way of ensuring sustainable fiscal strategies over time. If you so unless you believe that you can keep running budget deficits of indefinite amount over indefinite years without any consequences whatsoever, you would have to be raising revenues. And the idea then is not only justice, that is to say, you get money from the people who have it. You tax the wealthy and you tax the large corporations, but also that you ensure that the state has enough revenue to provide for all the public goods that it should be providing. What we've seen instead, and this is again data coming from the World Inequality Lab, Thomas Piketty and others, that there's a dramatic erosion of public wealth. There's a huge expansion in private wealth. There's more wealth today in the world than ever in history, and it's dominantly private. Public wealth has declined sharply over the last 3 decades, to the point where in some rich countries it's actually negative. They're net indebted governments rather than having any net assets, which is crazy when you think about it. It's really a kind of handover of riches, people's riches, to private big guys. And so I would say taxation is more than just a way of incentivizing corporates. It has much broader social and political implications.
Great.
I just had one other question. You did mention that the US has a history of favoring corporates. Could you just direct me to specific instances of that I could research further?
Oh, I could go on forever. But Mariana Mazzucato's book, Mission Economy, specifically refers to a lot of the recent methods. I mean, her earlier book, Entrepreneurial State, talked about how the state could actually influence private behavior through a range of incentives. The second one, which talks about the mission to the moon, but compares that, which was in the Kennedy era, if you remember, but compares that to recent subsidies to the state, that the state provided, whether, for vaccines in COVID-19, which massive subsidies were given without any accountability or any conditions on pricing, on distribution, on sharing of the knowledge and technology, which were all largely publicly generated, etc. Dean Baker has a book called Rigged, okay, RIGGED, which is literally about how markets are rigged in favor of large corporations in the US, specifically in the US. He focuses, again, mostly on the pharma industry, but not only on pharma.
Okay, perfect. Thank you.
Any other questions? Jayanti, I want to thank you for your time today and appreciate very much your participation in our group.
Thank you. Thank you.